Now, for more on Wednesday's record-breaking trading day, I'm joined by Anthony Chan. He's Managing Director and Chief Economist at Chase. Welcome to the show.
Glad to be here.
Now, as we can see, lots of people very excited about this 20,000 mark. But what does it actually signify?
Well, I think it really tells us that people are becoming, or investors rather, are becoming a little bit more complacent with the fact that our economic fundamentals in the United States are improving. We know there's a barrage of catalysts out there that investors are hoping for, whether it be lower corporate taxes, lower personal taxes, increased infrastructure expenditures, repatriation, bringing money from overseas for more investments in the United States. And all these factors will bring economic growth to be faster. In fact, we expect economic growth in the United States to increase to about 2.2% this year, and next year 2.5%. And we're not alone. The International Monetary Fund has already increased the growth numbers for the United States to 2.3% this year and 2.5% in 2018. So improving fundamentals certainly justify higher equity prices.
Now, you touched on some of the factors, and some people also attribute it to this Trump bump. So as we look at this surge that we're seeing, how sustainable is it?
Well, I think it's fairly sustainable because if the economy is getting better, then equity prices should be going higher. I would not be surprised if we see another 1,000-point increase in the Dow before the end of the year. It's not a significant amount. Keep in mind that today, with the Dow at these high levels, 1,000-point increments don't mean the same thing as they meant when you went from 1972 to 1987. That basically took almost 14 years to get there. These days, it's taking a lot less time because on a marginal basis, it's not all that significant. So another 5% or so increase in the Dow between now and the end of the year is not at all unreasonable. And in fact, if you lower the corporate tax from 35% to 15%,
Right.
It would not be that unreasonable if that tax cut is retroactive to the beginning of the year. Well, we could see almost an incremental boost to corporate profits of as much as 20% if I'm looking at another index, namely the S&P 500.
Now, Anthony, let's actually look at what the Dow is made up of. So we have these 30 publicly owned companies. So how reflective are they of what's happening with the broader U.S. economy when it comes to how businesses are faring?
Well, it's a good barometer for some investors, but in reality, it's not the end-all metric that we should be looking at. And in fact, if you look at the way money is managed and the indexes that are used, the S&P 500 has 58 times more money managed, something like 2.1 trillion that is indexed based on the S&P 500 compared to only 36 billion for the Dow Jones Industrial Average. So it's a good indicator. And in fact, Main Street America tends to look at the Dow Jones Industrial Average more closely, and professional money managers look at the S&P 500 more closely. But nonetheless, if the index is going up, and there's a pretty strong correlation between the Dow and the S&P 500, it certainly indicates that investors are, in fact, projecting that the economy and corporate profit outlook is improving.
Now, if you're someone sitting at home wondering how excited you should be about what's happening, who are the real big winners and losers when the Dow is surging?
Well, I think that as investors, we're all winners, but not all sectors are winners. In fact, if you look on a year-to-date basis, there are some sectors out there that haven't done so well. The utilities sector, the telecom sector, and then you got some sectors that have done very well. Information technology, the materials sector. Of course, in that list, also the materials sector. We know that with the increased infrastructure expenditures that the president is talking about, is starting to boost metal prices higher. And so a lot of the material companies, you mentioned Caterpillar Tractor a little bit before, that certainly is involved in the infrastructure expansion. All these companies tend to do a little bit better as the economy is doing better, and an environment where many of these catalysts that we've mentioned are likely to play an important role in 2017 and beyond.
Now, Anthony, we did see that global markets tumbled after Donald Trump first won the election due to a lot of uncertainty. So how is this record high for the Dow now being viewed by other countries?
Well, I think that the other countries are also sort of falling in line, that if the U.S. economy is improving, then that will have some beneficial impacts. Remember that the U.S. Economy still has a significant trade deficit. That is, when we grow faster, we demand more products and we import a lot more products. Yes, we're starting to hear some noise out there about protectionism, but our trade deficit is not going to go away anytime soon. So if we grow faster, we're going to import more. Even if we try to restrict that, we're still going to be importing more, which will have a positive impact on global economies all over the world.
All right, we'll have to leave it there. Thank you for your insights, Anthony Chan, Managing Director and Chief Economist at Chase.